Welcome to my video. I'll trust you'll find it helpful and informative. Please remember to like and subscribe. Thank you.
Says Peter Austin, age 38. Now, when you get there, you stop because you say, if he's age 38, primary rebate only. First thing you do. Okay. He is entitled to a monthly salary of 16,200. In addition to his basic salary, he worked 6 hours overtime at an hourly rate of 135% more than his usual remuneration of 110. So you can already say it's going to be more than double that. Okay. During November 2019, he also earned this in commission and he received a housing allowance during the month, much like the one that we did just now. He has the full use of a company car. The car had cost the business that amount, including VAT, which is important, when it was bought and allocated to him last year. The car did not have a maintenance plan, and his employer expected him to use the car equally for business and private purposes. Okay, now, equally means 50-50. 80% is going to be liable for tax. This thing where it says it does not have a maintenance plan. If it has a maintenance plan, then this amount that they give you here of 3.5% is reduced to 3%. But you don't even have to worry about it because they always give you that in brackets as well. They will tell you the monthly use of the car for tax purposes is 3% or 3.5%. But you may know that if there is a maintenance plan, it drops from 3.5 to 5. Okay, so he contributes 7.5% of his total package, excluding the car, into the Fairton pension fund. Peter does not receive any bonuses or 13 checks or any other fringe benefits apart from the ones mentioned. He does not belong to a medical aid and assume a maximum UIF funding salary of 14,872. Okay. Then look here. They give you his this tax table. Okay. When I am doing his, I'm going to explain to you how the tax table works. They give you the primary rebates, the secondary rebate, and the tertiary rebate. And now they say to you, I actually see that I didn't do this one. Because I am not in the Word document. Okay. Okay. Same thing. Doesn't matter. It's exactly what we had there. I'm just reading it to you now from the Word document. Okay. So now it says complete the abbreviated payslip. Now what I'm going to do, just for the purposes now, let me just white this out again, as we sometimes do. Okay, just white it out. And let's white this out and white out my reasoning there. Okay, just so that we can see what's happening. So in terms of his payslip, when they ask for his basic salary, it is given. Okay, it's 16,200. So we don't have to worry about it. We simply add it in. Okay, the overtime must now be calculated. Okay, so see what's happening here. I did say to you 6 times, because for the 6 hours, multiply by 150% more than, so that is why we have the plus 110 there, 150% of the 110 plus the 110, because it's more than. Now see there, I just left the bracket out, it doesn't matter. Okay, and when we do that calculation, that is the answer that we get. Okay, so for the 6 hours, he gets 155,000 or 1,551. Okay, wow. Let me try that again. 1,551.
Okay, but you keep saying 150 and it's 150.
It's 1,551 rand. 135%. It is 135%. That was what's given.
But you can say 150.
Okay. Problem. Okay, so my reasoning there, it's 100% taxable. My reasoning here, it's 100% taxable. Okay, so therefore, the full amount you will add under taxable as well. So far, so good. The commission is given. Once again, the commission is 100% taxable. So we put in the full amount. The housing allowance is given. It's 100% taxable. So we put in the full amount. And the reason we're doing this, we want to say but two things. One, what's on his payslip, and two, what amount of tax is he supposed to pay. Now then we get to the company car. Now with regard to the company car, it does not reflect on his payslip because you do not get anything for the company car. You get the company car. If you can put the company car on your payslip, you will have to squash it extremely small. You cannot do that. It's not an amount on the payslip. Now let's work out how it is, how we get to the amount. We take the 187,750, which remember was given, and it is the amount including VAT, so we can work with it. They tell us that we must work with the 3.5%, and we know that he uses the car 50-50. Because he uses the car 50-50, 80% of that is taxable. So we do the calculation and we put in the amount. Okay. Now we can just add his total earnings. That's not a problem. And on the taxable side, we will do the same. Now, when it comes to his pension fund, pension fund contributions can be deducted. Okay, let's see. Did I do it correctly? The amount is 1526 on his payslip. Okay, because he himself has to pay an amount, and the company also. Let's look again at what was said here. It said he contributes 7.5% of his total package, excluding the car, into the pension fund. Only he pays. The company doesn't pay anything. So when it comes to the taxable, we are going to subtract that amount. If the company also contributed, it would not show as a deduction on his payslip because he wouldn't know about it, but it would show as a further deduction in terms of his tax calculation. Okay. The reasoning there is it is deductible. Okay. Here, I think there's nothing to, it is just now we calculate the taxable amount or the balance of remuneration. So he is going to be taxed on this entire amount there. That is not showing on his payslip, by the way, because now we've calculated the amount at which he's going to be taxed. Once we see that, we can calculate his pay as you earn. Now let's do this slowly. Okay. The first thing we do is we say we take that balance of remuneration and we multiply it with 12. Why? Because he gets only 12 salary checks a year. If he got 13 check, we would have multiplied it with 30. Then we get this amount. So that really is then, think of it as part one of the calculation. It's done. Okay. Then we say that when we take this amount, we must subtract 195,850 from it, get the answer and multiply that with 26%. Why? Well, let me show you why. The 286,560 is what we've just calculated. Now we are looking for that 195. Now you will see here that it says if he earns a salary of per year, total yearly remuneration of 286,560 that we've just calculated, and we look at the table, we see that that amount falls into that tax bracket given. Now we say that in this tax bracket, you must take 20% of the taxable amount above 195. So now we obviously have to find out how much more than 195,850 is he getting. So that is what we are doing there. We're saying, okay, if we take the amount that he earned and we calculate and we subtract that amount, the second part of that calculation shows us that he is getting 90,710 Rand more than that. On that part that's more, he must pay 26%, because that is what it says. Okay, so now we take that amount and we multiply it with 26%, and we get to an amount there of 23,585. Okay, but that is not the total amount of tax that he must pay, because the tax table also says that in addition to this second part here, let me just show you that it's actually two parts. He must also pay 35,253. It's an amount that was calculated of what he would have to pay if he earned exactly 195. Okay, so we now go and we add that. We say the amount that we just calculated, the 23,583, plus, they don't do that, plus that fixed amount is the next step. So let's now go back to green. Why not? Okay. Then we now have that amount. Then we say, okay, what we must now do is we must subtract any rebates that's applicable. Now we know that this guy is not old, he's only 38, so he only gets the primary rebate. The primary rebate there was given once again. So now we go here and we say, okay, let's take the amount minus the primary rebate and see what is his total tax liability for the year. It's 44,618. But he's going to pay that monthly, so we divide that by 12 and it gets to 3,718 Rand. That is the amount on which he's going to pay as you earn. So now we have to go and we have to say, okay, we've calculated it. Let's just put it in there, 3,780. The other thing that must be deducted in his case is UIF. But now he earns what? Balance of remuneration, 23,880. But the UIF maximum funding salary was given once again. Where was it? Given there. As 14,875. 1% of that he must pay, and 1% his company will pay. Nothing of what he's paying is reflecting, or what the company paying rather, is reflecting on his salary slip. Only what he's paying. So we take that maximum amount, multiply it with 1%, get to 149, and we fill in that amount. Then we go and we say, okay, so we have his total earnings minus the pension fund contributions, minus the tax, minus the UIF, leaves him with a total take-home pay of 14,950 Rand.
Thank you for watching this video to the end. If you found it valuable, please subscribe and like. Thank you.